Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Wednesday, June 11th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Taking a look at the futures, we've got about a 10-point opening range in the E-mini S&P. We broke above it and then below it. Now we're testing the low of that opening range, 6,038. The expected moves are a little bit wider because of the CPI number. My suspicion is very big spikes will give us a reversal, and very big dips will give us a buy zone. We do have upward formations trending in both the zigzag pattern and the moving average. Momentum is a little bit mixed, but trending in the direction of overall prices. Dips are buy zones today. So what's the buy area? In my mind, I would love to see a massive wick down into 6,000, 6,005. I'll take a long setup there. Maybe it'll even come into the low of the expected move and bounce back if the CPI is a little weird. If not, the standard dip event at 6,024 makes the buy zone. But you want to be careful here. Don't rush it. Notice the high of the Globex open 3 days ago is almost the same as the high of the Globex 1 day ago, and that's at about 6,012-ish. I like that number for a buy point in general. We'll see what happens, but we have CPI today, PPI tomorrow, so we may sit in a very messy range event. But those are the levels that I like. Let's take a look at the NQ. I did add copper to the list. It's going to come after Bitcoin. Really like how that chart is trading today and lately. All right, now we are taking a look at the NQ, the Nasdaq mini futures. So the opening range, remember, it's 6 p.m. Eastern, 5 p.m. Central, and it's that first hour of trading. We broke above it as well as below it. Now testing the bottom of that opening range event. The market has about, what is that, about 50-ish points of that opening range, maybe a little bit wider, but it could be a short at 21,935 into a buy zone below. Again, expected moves are a little bit wide due to CPI coming around. We should see tomorrow's action have the same widening range in the morning. Weekly expected moves on the upside, still in clear target formations as the trend is up and the zigzag pattern is up. Momentum, again, at the midpoint, so it's not aggressive. That means that price action is very likely to retrace. Don't chase these trades. It's just not going to be advantageous in my mind. And certainly if you're using a strongly risk-defined account like TopStepX, you want to sit with micros across the board for all of these. The low of the expected move today, 21,750 or so. The high of the expected move, 22,136. Whoa, something just came out at 8 o'clock. I don't know if that is some kind of news, but top of the expected move. Watch for this one. You can see it being very noisy. This is what I am talking about in general. The price action is going to reverse. Look at these 1 hour formations. The high volume candlestick for yesterday in the NQ, I forgot to do this for the ES, puts us in this range. If we break out of 22,000, chances are we're going to have a squeeze to the north. You could easily do a buy stop there at 22,000. Just have to manage your risk fairly tightly. I would prefer pullbacks equal buy zones because this is such a meandering formation. Let me slip back to the ES very quickly and build out that structure here. You can see that we're holding it fairly well as resistance. Let's go to the YM. Grimace. Sorry. Let's get back to the YM. Let's check the opening ranges here. Largest candlestick. This one is still bigger than that. Let's use this candle. Why, Emery? Well, it's way bigger than this volume, so it makes sense to use the volume candle. I would also anchor the VWAP there. For those of us that do VWAP anchoring, take a look at this motion. You can see that this box is important as we went to the top of the last volume area, and now we're battling at the bottom, right? So pretty important area of very heavy congestion. You can see major overlaps. What do I like? Buying on the deeper edge of the formation. I like that area at about 72,700. Maybe 72,000. No, 42,700 or 42,600. Wow, I do a lot of that. Just transpose numbers all the time. Luckily, my husband manages the checkbook. Thank goodness. I'm just the idiot savant in the office over here on the other side of the house. All right, highs 43,000 for the upside. Again, 42,600 or so for the downside. I expect a very wicky morning, and that entire candlestick formation might give us the whole day of motion in terms of range. All right, let's take a look at micro Bitcoin. We had a very big run-up, a shallow pullback yesterday, pretty solid volume, bullish volume. It's the biggest one we've had in several days, occurring at that 3 p.m. Eastern time, and you can see we are trying to hold it. If we lose it, the low edge of the expected move is 109,240. I would expect it to break that edge and move into potentially, I know this is going to be the wrong color. Nope, there it is. 108,730. If that happens to fade, that would be the area that I look at, and a further move down into the heavy 1 hour congestion space at 108,270. Upside expected move on the day, 111,547. Downside expected move on the day, 109,241. But again, if we move here in reversion to the mean, we should break through this area. Notice the implied volatility for the week was 110,354. We blew through that yesterday and then collapsed, and the failed retest of it has brought the shorts into the range. I would not be surprised to see us fade to the bottom of the box, but again, that depends. So look for the edges and position with a very risk-defined formation. Super important. If we bounce to the low of the opening range at 109,990 and lose it, meaning we fall below 9,880, I like that as a short. I do. Into the continuation of 108,000 below. Let's welcome copper to the party. Listen, micro copper is very nice to trade. Beautiful price action. The option chains, they're monthly options, so they don't move a lot. They're like the YM. It's broken well out of the option chain for the front month. This is for the back month, and it's expanding to the downside. Trend is down from the zigzag pattern. Trend is flat from the moving average, and momentum shows it quite oversold. Let's take a look at the daily chart here. We can see that the chart is moving very sideways. This flat moving average suggests that we don't really want to jump into any longs right now until we get to 4.6. And if we get to 4.6000, nice trade. This moves in 10,000ths of a tick. So when it runs, it can make for a beautiful trade. Is trend up? Yes. But it's still sitting in a solid range through the day. Huge spike up, still showing downside. Pullbacks very likely into 4.6439 and 4.6000. That's what I like. I'm really fond of that chart. It moves so beautifully. Right now, they're trying to hold this 4.8. I think the bounces are sell zones, folks. I would love for it to test the middle of the opening range, which was really fairly wide. I'd love to see a short around 4.8625. All right, let's take a look at oil. Oil's moving to the upside. It's blown out of its expected moves on the day, right? And this 66.33 is an opening range formation from times past. That's why we see the little yellow line. Why is this moving like this? Well, Iran just saying, hey, I'm not going to do that. And, it is what it is. Here's the very interesting thing. If this starts really moving, we are going to have ourselves very interesting turn of phrase in terms of where the markets go. Because energy, huge component, inputs that say, hey, it's cheaper for us to move. That being said, this is very bullish right now. Dips are buy zones. It's at a topping formation. That's at 66.33, but the dips are buys. I expect any pullback into 65.60 to give us a potential bounce. What would I love to see? I'd love to see it come back to 65. Could you take a short up here? Yes, but you got to see a reversal formation instead of picking a top. This could be a freight train, and although it is telling us that momentum is drifting, it could simply drift into shallow support and give us more upside. Expected move, $65.59, and we are well past that, testing 66. The bottom of the expected move, $63.97. Ideally, a pullback into the opening range would make for a wonderful test and long formation. Prior days, high volume move. These two look about identical, but maybe this one is stronger. We're inside of that box. So watch for the top of the box to potentially give you a shallow fade and a big move up, or a bounce off of the top and a rotation downward. If you trade on the short side, make sure you're using a tight time frame because it is very counter trend. Let's take a look at gold. Look at this mess. Buy the bottom, sell the top, right? Holding a formation that could be really bullish, right? Dollar moves down, it takes more dollars to buy gold. If the dollar continues to move down, gold will continue to rise. Expected move on the upside, $3,374, $3,367. The target range, I'm going to put it into the congested area near 3,380 on the upside. On the downside, the expected move is 3,322. Notice, first candle of the day, we faded and then immediately recovered. And so this bounce action here, there's a fairly inverse correlation to the ES and gold happening right now. It's only been moving for about 2 or 3 days together, but as gold bounces, the market rolls over. So we'll watch, right? We'll watch and see. The bounce zone for the long looks like the top of the opening range at $3,347. Bottom of the opening range about $3,341 with a little bit of a wick that made a mess. And now the high volume area of the prior day, We can see we're locked in that box, right? So the pullback into the base of the box gives us buyers pushing into the resistance zone. Trend slightly up. Moving average down to flat. Momentum mixed. So this means these candlesticks are very likely to retrace each other. I am looking for a topping formation that will give me another short, or something that wicks down into the floorboards here at around 3,320. And then I will try along there. I am not going to mess around in the middle. Let's look at SPY. SPY is very sideways. Big expected range. Big expected range. The expected move to the upside, $606.70 or so. Expected move to the downside, $597.40 or so. So far, sideways. And we're actually building a megaphone. What would I like? Well, trend is mostly up. Both the zigzag and the moving average. Momentum down. So what that means is the dips are buy zones into resistance. Into resistance, you don't want to hang on for a great big move unless you get a savage dip and it begins to lift off the floor. The last high volume candlestick of note is the one that we are seeing across the board at 3 p.m. And we're right inside of that box. You want to take a tight trade before the CPI? Have at it, but it's 11 minutes away, so I'd pump the brakes there. Just me. All right. Range for these guys looks like about $2 or so. Much tighter than what the candlesticks are showing. Finally, let's take a look at the Qs. Trend is a bit flat. A little bit up, but in general, up to flat. Moving average, up to flat. Dips are buy zones. Highest volume candlestick of the day, also here at the 3 p.m. candle. And wouldn't you know it, we're caught in the box. So wait for a candlestick confirmation either underneath $532 or above $535. Expected move to the upside, $538.20. Expected move to the downside, $528. It should be 96 cents. Put it at 95, leave it alone. Of course, you can see it is the base of the formation right here. All right, going to be an interesting day, largely very wicky. Watch out and stay frosty. I'll see you on the streams.